Consumerism is dead. Long live infrastructure investment. So that is the topic, or that is the theme I am going to discuss in today's video. Hello and welcome. Namaste. This is Niraj here. And before starting, I would just request you to subscribe to my channel if you have not yet subscribed till now. And after watching the video, if you like, you please put a like and share it with your friends. So why this consumerism is dead and long live infrastructure? Because of, as you know, this pandemic kind of situation is continuing despite all this lockdown and again trying to start resumption of the activities, but still the normal activities or life is restricted because movement is still not free. There are all sorts of restrictions on conducting work, conducting business, conducting normal life, and free transportation also is still, free movement of transportation is still yet not done. International airlines or international air travel is still restricted. All kinds of restrictions are there. Even, there are night curfews, so, free kind of, it's not the normal life yet. And because of that, I believe that, and this is continuing to, go on for a much longer period than initially we all thought of. So that is the reason I believe that consumerism is dead. Consumerism is dead in the sense that if, because of this all restrictions on the movement and activities, so where the people can find basically to spend money, you need to have, first of all, you need to have money to spend on. And because of this economic activities and loss of millions of jobs, and also the worry about losing jobs because of this continuing uncertain situation, more and more businesses are getting closed, and more difficulties, or the cutting of the money and the cutting of the, or the reduction of the disposable income in hands, and savings gone, and medical expenses increasing. So all this kind of certainties people are not spending, and they will not spend also. So this trend will go on. So that is the reason I believe that consumerism is dead. So this kind of shopping and going and spending money on retail, fashion, or entertainment, and this will be much restricted. And that is the reason this theme is how to get out of this situation, or this which are the segments which can propel the economic activities, and also kind of propel the growth, and in a way substitute for the consumerism. That is the only thing, is that in today's situation, everywhere the only government can help push up the economy by spending more on the infrastructure. So that is the reason I say consumerism is dead. Long live infrastructure investment. So all kinds of infrastructure, be it transportation infrastructure, roads, rails, ports, bridges, building of cities, towns, agricultural investments. So agricultural infrastructure also is a big, huge opportunities everywhere, and particularly in India. Building up of cold chains, building up of warehouses, building up of equipments, and facilitating of more equipments and more modern scientific agricultural concepts and resources, and the third infrastructure which the government can push is the defense infrastructure. So defense equipment based infrastructure, or that is the sector. So these are the three sectors which I believe would propel, and which is the only way, that the government also should not depend on that private investments will come, because private investments is not going to come in hurry because of that. So this is the kind of infrastructure investments. It's overall defense infrastructure, agricultural infrastructure, and in general this roads and other physical infrastructure. So this is what only government can spend money, and government has to do this all over the world, I think, because the private investment will be hard to come by. And this particular infrastructure investment will drive consumption of metals, consumption of chemicals and cement and all these industries. And these industries are only going to, that is the reason you will see that. And if you look at the second aspect is that look at the companies or the stocks or the sector which are having valuation also. So because in last 4-5 months the crazy kind of the run up has happened in the market, which has driven the valuation through the roof, and as if the concept of valuation has just gone out of the window. So if you look at, say, why I am still I like this infrastructure space, or why I believe that there is still scope for this infrastructure related commodities like metals and mining and cement and chemicals. These are the companies which will be continue to do well because of the valuation also. If you look at most of the steel companies or metal companies and look at this price to book value, even after run up of 40, 50, 60%, they are still, most of them are near to 1 price to book value or less than 1, or at max around 1.5, 1.6 times the book value. So it is still not, it is still very reasonably valued. There is still a lot of scope to go up. But if you look at this technology stocks, they have gone through the roof, in the sense that there is even the valuation has gone crazy that we can no longer justify, even despite of all the things. But still, at the end of the day, you have to look at how the valuation. If you look at most of this, say Microsoft and Apple and Amazon and Tesla's, their valuation is price to book value is equivalent to, it's most of the time it is like price to earnings, PE value, which is crazy, because most of the times you can have this single digit price to book value, even if after going up. But most of these companies have price to book value of 30, 35, 27. This is like, it's not price to book value, but this parameter of price to earnings, which is crazy. Even price to earnings 35, 50, 40 you can understand, but in most of the cases this PE and that PB, that is price to book value, as if the concept of that has dissolved into one. So this is the kind of it's becoming a very dangerous sign. And despite of all this, at the end of the day, you also have to look at this valuation in price to book value, in the sense that if some things go wrong, if the sector goes down, or the things go bankrupt, or the demand goes down, then how the investor can take its money back, or there is some kind of a safety. So in case of infrastructure or the metals and all these commodities where the huge investment, capital investment is required, there is a cushion of physical assets like factories, like machineries, equipments, buildings, offices. So over and above that product, like steel, if you say the steel or aluminum, anybody, whether it is for utensils, whether it is for aircraft, whether it is for automobile, whether it is for construction, you will require, that is a standard metal. So it is irrespective of you buy it from X, Y or Z company, but that demand is there. So everybody can sell, everybody is selling and everything is going on. But the same cannot be said about, say, consumer or the brand retail kind of a thing, like say car or automobile company. So X car may be sold more, X brand car will be sold more as compared to say Y brand. So there may be demand of X brand car, but there may not be demand of say Y or Z kind of a brand. So X may be doing exceedingly well, but Y or Z may not be doing well. But it is not the same case with the commodities, where everybody, because at the end of the steel remains steel, it doesn't change. That one specification, it is, if it is required for say for construction some kind of a X grade, so all companies are producing, and irrespective of that, whichever the pricing and availability, it is taken. So that is what the differentiates, and that is why I believe that this infrastructure push by the government, infrastructure investment, will continue to, because that is how it is going to happen in next 2 or 3 years. It is government has to spend a lot of money, not the private sector will not be investing much into the capacity creation or the new projects. So that is where this government money will be driving infrastructure and driving consumption of these commodities, metals and infrastructure related, and with the cushion of earnings or valuation. So that also gives us the comfort that these companies can still continue to do well. as against say technology stocks, which can just crash one day, because this is now going into a crazy stratospheric level, where even as you go up, you know that in the air, also in the atmosphere, that oxygen level goes down, so it's hard to breathe. So the technology stocks has reached to that kind of level, stratospheric level, there is no oxygen actually. Any time it can die, means it can just collapse. So better to stay away from this kind of euphoric sector. And that is what I just wanted to, that this is the theme that you can continue to play in this. Consumerism is dead, infrastructure investment long live. That's it from my side, and ciao from Niraj. See you again next week with some new concept and new ideas. Bye.